Welcome back to another market update video for Los Angeles and Orange counties. The data is now in for the month of October, and we're going to take a look at what happened with sales prices, closed sales, and the supply of inventory in these two large counties here in Southern California. And we'll also take a quick look at interest rates, and then I'll share some of my thoughts on what's happening and what's likely going to happen as we move forward into 2026. So let's go ahead and get started. And real quick, are you, the person watching this video right now, thinking about buying or selling real estate here in Los Angeles County or Orange County? If you are, reach out to me. My contact information is down below, and I'd love to help. All right, let's jump back in. So getting started here, I want to just take a quick look at interest rates. And you can see here that over the last couple of weeks, last month or so, interest rates have kind of bounced back up. They were down here at 6.13%, and then now they're back up at 6.37%. And this is something that I've been talking about in several videos in the past. We are seeing the market push back against lower rates. Of course, the Federal Reserve came out recently with some somewhat hawkish comments as well, saying that a December rate cut is not necessarily guaranteed. But overall, the market is experiencing and seeing all this inflation and the likely inflation that's going to come in the future. And so rates are starting to bounce back upwards. And I think this is going to be an ongoing issue, kind of a tug of war, if you will, of the Fed trying to get rates down, but the market saying no, rates need to be higher moving into the future. And of course, mortgage rates are going to be affected by what happens with this 10-year Treasury rate that the Fed is ultimately trying to influence and the market is rebelling against. Now, getting into the actual market data, we'll start here with the County of Los Angeles, and we see prices are actually flat year over year, $900,000 median home price, 0% movement. And you can see here, we got as high as $950,000 back in June of this year, and now we're down right at $900,000, and we've reached this price point several times in the past. We reached it here heading into February 2025. We reached it here back around August 24, again around April 24, and then back here June 2022 and April 2022. So as I've shared before, we really have seen pretty flat price growth over these last several years, at least in Los Angeles County, in terms of median home prices. Now, the next thing we want to take a look at here is the supply of inventory. And this is important because this kind of shows us how much inventory is out there sitting, what's happening with it. Are we going to expect to have a weaker year next year or a stronger year, so on and so forth? And we see here, we're still up at 4.3 months. We're up 7.5% year over year in inventory. And of course, you could see the trend here. We've been trending up really since 2022. If we zoom out and we look at a longer chart, we really haven't had inventory this high going all the way back to about 2014. And this, of course, is when we were starting to recover, from the 2009, 2010 sort of crash. And the last thing we'll take a look at here for the Los Angeles County is the closed sales. And we see that we are up slightly, 1.9% year over year. Again, this was helped out by those lower rates that we saw. That helped a lot of buyers get back into the market, help clear some of that inventory that was sitting on the market, and so on. All right, next, let's check out what's happening in Orange County and compare that to Los Angeles County. And first off, we'll start here with median prices, and we see that we are up 2.9% year over year, 1,183,000. And again, similar to Los Angeles County, we are down slightly from where we were in the middle of this year, and then lower than we were back in 2024 as well a couple times. Moving on to the supply of inventory in Orange County, we see we are at 3.1 months, up 10.7% year over year. Obviously, there's been a little drop off here. This is seasonal. This is typical as we head into the winter months, Christmas, December, and so on. But of course, we did also get some help last month from the lower rates. But again, overall, we are still here elevated, pretty substantially going back for a very long ways. And the last thing we'll consider here is closed sales, and we are up 3.8% year over year. So again, a slight boost last month because of those slightly lower interest rates that we saw, offering some relief for buyers out there in the market. So overall, inventory levels are still pretty elevated going into the holidays. Rates have come down a little bit, but not really that much. So going into 2026, when we have more and more economic issues, because right now we're seeing a lot of writing on the wall in terms of poor economic indicators, I think 2026 could prove to be a pretty difficult year. The Fed is going to try to do what they can to lower interest rates. This obviously will likely help and create a little bit of a tailwind, but at the same time, we have other headwinds that we're facing. Inventory is still remaining elevated, and I think there's probably a lot of pent-up supply in the market. We always hear about all this pent-up demand, but I think right now there's probably a lot of pent-up supply. And what I mean by that is there's a lot of sellers that probably would like to sell, move, go somewhere else and take that equity elsewhere, but they're concerned that it's either going to be difficult to sell, they're not going to get the price that they want, or they're still concerned with the interest rates on the other side, what they're going to have to pay to buy the home wherever they end up going. So I'll keep an eye on it. I'll keep you guys updated. Do me a favor, if you need help with real estate or you know somebody who does, reach out to me. I'd really appreciate it. Leave some comments down below. Let me know what you think is going to happen next year. As always, I appreciate you guys watching, and I'll see you on the next video. Take care.